Yo, what's up, everybody? Happy Halloween. Welcome to the TraderMerlin show. I'm channeling my inner LL Cool J today, minus the paint, of course. Don't want to get any trouble with anybody. No, I wasn't going to dress up as a geisha for you. I figured I would go with a little bit of bling. That's it. Anyway, happy Halloween, everybody. I had a more elaborate costume set up, but I was like, you know what? I'm going to do fine in this one. This will be a fun one, easy to walk around in. Anyway, let's talk about the month. We are looking at a waiting on the Fed kind of show. I am going to look at predominantly the choppiness of the market today. We did have some decent movers. As you guys know, I was kind of waiting for a continued up move in the NASDAQ today. I got it slightly. No. Margaret, real watch? Are you kidding me? Would you think I'd ever spend money on something like this? No way. I don't even know if this thing works anymore. That head said Gilligan to me. You know, it's a red Kangol, and LL Cool J was always about his Kangol, his jumpsuit, his big, obnoxious gold chains, which, of course, I would never spend this much money on a gold chain anyway. So there you go. That's it. Maybe if it was a Friday and I had some whiskey, I might actually throw some raps down for you. I'll do the whole show in a rap style, but that's not going to happen today. So let's go into our top of our markets here. Obviously, it's waiting on the Fed. As you guys saw, we had pretty much positive across the board. I think it's a little bit of optimism regarding what the Fed was going to do, but there weren't any real monster movers, right? NASDAQ, it's coming back down a little bit, but it was looking pretty nice near the end. I liked it. I was happy the way the market turned out. I did exit my position, just so you all know. And I'm going to start this off by going through one by one where we ended up with, and then I'll look at the day. Oh yeah, the Aussie Bark at the Moon looks pretty good too. I get that one. Great album, by the way, and very appropriate for Halloween. So let's start. I'm going to actually start things off. As you see here, I'm starting at the top this time. Normally I start at the bottom and work my way to the top. Bitcoin was your number one performer, up 29.3%. That's as of just a few minutes ago as I rallied up these numbers, and the chart of it looks absolutely fantastic. We are still just sitting in this sideways consolidation, right? I've made it that point here that this looks like a bullish flag in my opinion, where we have this real big, strong surge to the upside. You get some hesitation. If people were really interested in taking profits, remember, trading is all about behavioral psychology, period. And if I'm looking at this one, I've got to think, man, there's some people that own this at 26,000 that are just loving it and wanting to sell and make some profit, right? Or take some profit. They're not. There's really almost no profit taking going on over the last few days, which is great for anybody who's holding Bitcoin. Very optimistic for me anyway, in just looking at the behavioral psychology concept. If it does break, I do anticipate it breaking to the upside on this one because that's the prevailing trend of the flag or the pole of that flag. So let's hope by the end of November this thing actually hits 45,000 like I thought it would do in August on that Bitcoin ETF approval. That was your best performer by a wide margin. Coming in a very close second, I guess. What's going on here, Merlin? Who did this? There you go. The 10-year yields continue to move higher. Now, we haven't broken the previous highs. As you can see here, I've got lines driven all over the place. I know it's kind of messy. I'm leaving the red diagonal line because that was my forecast for the end of the year, was that we're going to get up to right around 5.7% on the 10-year, which would put us about a 9% 30-year fixed rate mortgage. You know, this is a great picture of an uptrend. It's making higher highs, higher lows, and just kind of keep drifting. We really need to get above that 5%, though. We're currently at 4.926. Tomorrow may have an impact on that one. We'll see how it goes with Jerome Powell's announcement tomorrow. We'll talk about that here in just a second. But Bitcoin 10-year yield increased 7.83%. Now, I don't have the numbers in front of me, but somebody posted something pretty cool, and it showed if you bought a house, a $300,000 house at like a 2.87% mortgage, you'd pay, whatever, $150,000 in mortgage interest over the life of 30 years. If you go to 8.5, it's like $600,000 in mortgage interest. So, I mean, pretty crazy to think such a big difference. And it doesn't look like that's going to stop anytime soon from that uptrend. So 10-year was your second place for the month of October. Third place, do I have them in order? Okay, gold, 6.76%. Rate of return positive for the month. Of course, today wasn't the best. Today was down 0.64%. But all in all, a very bullish picture for gold. And again, I believe a lot of this has to do with the feelings that we are heading into a recession and just global increased tensions. Again, there was some talks today that Israel said they took out a major Hamas leader. I'm sure that's going to come with some retaliation from somebody out there. And I just feel that that's going to create a bit of a system shock or more system shock going forward. So gold is a benefactor because of that. Nice move. And let's just go back from the bottom to the top because it's way better than 6%. Talking 10.76 from bottom to peak of gold for the month of October. So to October, typically a negative month, or not typically a negative month, but has bearish traits to it, I'll say. And this time it was. All right, let's go to, that's right, Oliver. I could go Run DMC as well. I like both those bands. I originally got into hip hop because I can thank Erin Dervin from my high school. She's a lawyer up in Sacramento. She gave me a cassette, and on one side had Licensed to Ill by the Beastie Boys. This is 1986, by the way. Licensed to Ill by the Beastie Boys, and on the other side was Raising Hell by Run DMC. So those two albums to me just kind of spurred it all. I was like, wow, what is this stuff? Funny to think the Beastie Boys were a punk band. It ended up being one of the greatest kind of hip-hop bands ever. Pretty amazing. Anyway, let's go to our fourth place finisher here. I hope I'm not out of order. Dollar index, 0.54% increase. And again, you hear me say this over and over. You're probably sick of it. But that dollar index, the Dixie, is key in keeping our markets either moving up or down. This case, you look at the daily here, really just been pretty sideways. Even though it shows up 0.54% gain, it really has been fairly sideways for the month of October, which is a good thing because if the dollar continues to surge to the upside, then the equity markets, I think, would suffer much more. So it's nice to see, and for anybody here who's bullish, nice to see this go sideways. But, the longer this goes sideways, in my opinion, the more likely it's going to move to the upside and continue in the direction of that prevailing trend, as typically happens with price direction, according to Bulkowski, who wrote the book on chart patterns. All right, that was fourth place. We'll go to our fifth place finisher here, which is, drum roll please, the NASDAQ, and that's starting to get negative. Negative 2.83% for the month, but it's really the string of months that we've had here. So let me start this on a monthly so you guys can see what it looks like, bigger picture. There's your monthly. It's the third consecutive negative month. So September, October, or August, September, and October, both negative. Off of our peak there, we'll go from peak to where we are right now. NASDAQ's down 9.79% overall. And we'll talk here a little bit about the potential shoe to drop with Apple on Thursday. And I received some comments about that as well. A lot of people thinking that Apple is going to just really miss the beat and crash this market. And I kind of am in that camp, although the more people that think that, more likely it's going to actually do the opposite. It's just the way markets work. So NASDAQ was your fifth place finisher, down 2.83%. Right on the heels of that was the S&P, almost the same number, 2.85. So just slightly worse for the S&P. Even though it was up to 8.63%, you have three just wicked down candles in a row. Coming off that peak that was back in July to where we are right now, 9.11%. An emergency for the NASDAQ. We'll see if it gets below that 10% mark and holds down below 10, maybe even push on to our 20, which I think is not an unrealistic target maybe by the end of the year. So not a great month for the S&P, NASDAQ. And then finally, the Russell, actually second to last, is the Russell. Russell down 7.44%. This is one of those ones where in hindsight I kick myself for not holding on to it. As you can see, we've got tremendous markups. That's the Head and Shoulders, guys. I'm officially going to delete the Head and Shoulders. We talked about it enough. It's gone. It came to fruition. We traded it. We made money on it. Stop talking about it, Merlin. Let's get rid of that Head and Shoulders pattern. So it is now officially off the charts, done. No more Head and Shoulders pattern. But that Head and Shoulders pattern yielded from peak to trough 18.78% for the Russell. And it's still, even though it was up today, just slightly, 0.9%, still a pretty ugly one. Let's check out that daily time frame here. Boom. I mean, this is real ugly. And, I'm proud of my call. I love the fact that this show is live and I show you the charts and make these calls, but more importantly, that I actually traded that one back September 1st when I said, guys, I'm opening a big short position on the Russell. My only regret, of course, is it's typical this way, is I ended up getting out. I was back here. I left a little bit of money on the table, but I just don't care. Totally content with my Russell trade. One of the better trades I made this year. I should be Paul Stanley because he's a star of our trading show. Skilled Stocksman, here's the deal. I don't know if you were here yesterday. Given all the makeup that Paul Stanley has to wear, I'll never do Kiss. There's no way. You guys can't see it. I am like scabbing on my eyelid, my eyebrow, all around my eye, and my jawline from scraping off paint from my face. And Ed up in San Jose said it was great. Thank you, Ed, for the message. He sent me an email and he goes, "I have 2 words for you: cold cream." That may have worked, but it didn't work at the time when I needed it to work, as crunch time was coming down to it. So no, I won't be doing makeup costumes. I don't think ever again. That was enough for me. I don't need any more makeup. A little stuff maybe, but nothing big. All right, we're not done. I got one more to talk about, and that is the beatdown in oil that's been just significant for the month. I mean, 10.41% decline in oil for the month. Here's your daily of it. I get some lines off this screen here. I really don't like what happened today. I mean, I do from a consumer level, right? But I don't like it from my forecast that we're going to hit 100 by the end of the year. This doesn't bode well for that at all. You had this breakdown below our lows from October 6th. So, for those of you who are like me, who really focus on, hey, what is the trend doing right now? What are they doing? Well, the trend looks like it's now reversed, and it looks like it's starting to make some lower lows. So you just made that lower low today. We closed below that October 6th low. It's already starting to make lower highs. This, to me, is a trend reversal to the south side, and, it's tough. I'm very conflicted on this. I have no position in oil, so I'm not making any trade on this one because of my indecision here, and here's why. Again, I believe that crude oil is going to surge higher because of the conflict. I think Iran's going to step into this. I think it's going to start to get a little bit uglier when we bring in more protests around the world and Middle East between, Palestine, Israel, and having the global community pick sides in that, which really should be more of, let's not pick sides. Let's look at both sides and see how we can resolve this peacefully without more bloodshed and life lost. Unfortunately, I don't think it's going to go that way. I think history has shown that this will just kind of escalate and get uglier. And if that does happen and Iran gets involved in maybe some of the other OPEC or OPEC plus countries, then I think oil is going to surge again. So I'm really surprised, honestly, to see it drift lower and make a new low. But I'm not going to be trading this one short. I still am of the belief that we're going to see it go higher. So there we go. I really... and I'm shocked. I'm shocked that it's breaking and making new lows. I still think we're going to get to 100 by the end of the year, but now the odds are getting slimmer and slimmer and slimmer as we continue to drift lower and lower. I mean, just the past couple of weeks on crude oil have been pretty savage. We're down, 10.14% just from October 20th. I mean, that's a significant slide in just a very, very short window of time. So, all right, that was your worst performer out there. That's your top 7 that we normally go through. The only one that I think, the one that I believe has the best picture right now and best probability of a move here is going to be that Bitcoin chart, which you see on your screen right here. Now, let's shift a little bit and get into probability. I'm talking about tomorrow. So the original title of the show is, waiting on the Fed. I've done a title like that before, so I feel like I'm kind of getting old with my titles. But I'm trying to get ready for trick-or-treaters tonight, so I didn't... I got to redo I have a haunted tunnel at my house that I use to scare children. It's great. I love watching them scream and run off my porch as they're just terrified from my entryway of my house. It's great. Anyway, FOMC statement comes out tomorrow, as you guys all know, 11 a.m. Pacific, 2 p.m. Eastern Standard Time. Here is the probability of that rate announcement. And it hasn't changed that much. There's been a slight increase in the probability of a rate cut tomorrow. There's a 3.3% chance they're going to see rates cut by 25 basis points tomorrow. I don't think so. Right now, 96.7% probability we're going to keep rates right where they are at, which, I think that's probably what's going to happen. Now, anything that deviates from this, anything that deviates from keeping it where it's at, or even comments that strongly suggest a cut or another increase by the end of the year is going to create big waves in the market. So as normal, I would encourage you guys to be extremely cautious tomorrow. I exited my QQQ longs today. I dumped those right near the close. It was perfect. Rallied right into the close and then sold off. So love that. I closed out my Fortinet puts today. Wanting to go more just into safety and cash. Because if the FOMC announcement really does jar this market, I'd like to be able to capitalize on some of those opportunities. But I think the ultimate fireworks are going to happen on Thursday after market close with the Fed. Let's see. With as much as you dance around stating your age, I think your future Jack Ben. I think it's a Benny Hill. But Powell says he won't know the effect of the rate increases for 12 months. Even at that point, he'll only have... Exactly. And I think that's part of his backstop, Tom, is Jerome Powell is kind of using that as like, hey, I don't know which way we're going to go. We still haven't seen the full impact of the rate increases. So pausing is probably the most prudent thing to do at this point for Jerome Powell. I can't fault him for pausing. Raising, I think, might be problematic because if he raise again, you guys tell me, everything's a domino sequence of events. So if he does raise, which I'm almost certain they will not, but let's say they raise one more time by the end of the year, what domino effect does that have on our market? Right? Type in the chat. I'm curious what you guys think, because you have to be thinking that, right? If Jerome Powell raises 25 basis points, what impact does that have, and how does it start to play out in the markets? So to me, that's a pretty important piece. If you have, let's say he raises again, it raises the cost of capital. And what that means is the short end of the yield curve is going to pop back up again. That means that our inversion will get steeper. And most likely what will happen is that long end of the yield curve will catch up to it, which means the long end of the yield curve will get higher and higher and higher and increase the probability of me getting to my 9% 30-year fixed rate mortgage by the end of the year. So, if they raise, those odds get much better that we're going to see, a 10-year yield at 5.75 by December 31st. Raising the cost of capital, making it more expensive for businesses to expand. And also, the big piece here is if they raise 25 basis points, imagine what kind of pressure that puts on the banks. The banks are already stressed. I found some really interesting documents that show how much of the held to maturity bonds are underwater by banks. We're talking, getting close to $200 billion worth of bad bonds of losses on those bonds if they were forced to sell right now. So we'll see what happens there. The best thing for the Fed to do from an economic stability point and less shock to the system is just to hold for right now and not do anything, regardless of inflation, regardless of GDP numbers, regardless of retail sales, all that stuff. They should hold for the foreseeable future until there's a clear, distinct trend change, either up or down in our current rates. So let's see, what do we got? What's up, Pepe? It's not going to matter. Well, it always matters. Naum says banks will become insolvent. Yes, not all of them, right? Not all banks are in that precarious situation that we saw with Signature and Silicon Valley and First Republic. But there are many that are in a dangerous situation because they've been borrowing short-term, lending long-term, and all of a sudden those long-term yields are rising. If there's any movement or run on those banks, they're forced to sell those bonds, and that could create significant losses. So, Merlin, what do you think of the euro futures? Where do you think it's? I'll check for euro. We'll check currencies here in the market. Yeah, Daryl says real estate market will feel intense pain. Yes, let's talk about that real quick. It's a good point. I agree with you that the real estates will feel more pain, continued, right? Just having that 30-year fixed rate mortgage keep going up does put pressure on the markets. I saw somebody posted on Twitter last night, says, man, if you look at we had 8.5% mortgages back in the 1980 as well. It was no big deal. And someone goes, listen, a-hole, it is a big deal because now houses, back then they were $100,000 for a house. Now we're talking millions of dollars for homes. That's crazy. Anyway, I thought that was pretty funny. So let's go look at the economic calendar for today, just to sprinkle on the housing, since I agree with Daryl significantly here. It could add a lot of pain to our housing market. But look at the S&P Case-Shiller Composite 20 Home Price Index, right? This one was a wild card today, because we've had an aggressive sell-off from peaks of 20% year-over-year growth to all of a sudden we had 4 months in a row of negative contraction there. I was like, uh-oh, could we see something like this? I'll show you what happened back in the 2008 era. Do we see it start to have this massive pull down and all of a sudden people are underwater massively on their homes? That would have really crushed the markets and economy. Now, I'm not saying that we're done. I'm not saying that the housing market problems are over and everything's honky-dory, but this is very good to see. Year-over-year prices have increased 2.2%. That's a sigh of relief for the real estate market, because if this did continue and showed a pattern similar to 2008, or even this next one you saw there, which was back in 2011, then all of a sudden you add in a whole nother factor to this, which is defaults and how many people now are underwater, can't make their mortgage payments. And you can see there's so many dominoes that could fall for here. So it's that's why I love this stuff, man. It's this. What do they call it? A Rube Ginsburg game, or Rube Goldberg games, where the things roll and they hit this and it triggers this and triggers that and everything gets triggered different ways. I mean, to me, that's exactly what is what these markets are like. That's why I love trading and investing. There's always knowing the reaction. When the golf ball hits this, then this happens, and it's fun. Better hope unemployment stays low. Agreed, Sava. And it is, right? It's rising, but it's nowhere near a level where anybody's concerned, right? We're at, I think 3.8 or 3.9 right now. Big deal. It's when you get up above 5, 6, 7, then we start to really become the talk track as unemployment, and then it's an issue. So let's see. Tom says, money changers are affected by 25 basis points. Value creation business won't feel much. From my experience in $200,000 to $60 billion business, interest rates matter very little. Well, okay. I would beg to differ on that one, but hey, I'm not running a $60 billion business. The cost of capital is going to impact everybody, and businesses are not exempt to that. Now, typically, a business is going to position themselves a little better because they are looking at economic growth. They've got all these plans and models in place for business expansion. So certainly, I think it might be muted, but if you're looking to expand your business and we go to economic hardship and you're forced to pay way more money for your loans, that is going to impact you. Am I Eminem? No, I was going to try to be, I guess I should say Eminem. I was going to be LL Cool J, but obviously I'm not going to do paint. I don't want to get myself in trouble with anybody. I'm an old school rapper, right? You just call me old school hip hopper. From the 80s, back when they used to wear Kangols and gold chains. I'm straight from Yo MTV Raps. Oh, what a great show that one was. Let's see, what else I got here? Sorry, I saw some comments fly by that I didn't get a chance to read. Lisa says, delayed reaction. I love the Beastie Boys, playing their music for my daughter when she was... I love the Beastie Boys. Good stuff. Let's see, what else do I have here? Yeah, I'll look at AMD here in just a second. To graduate to rap, I'm going to call him Slim... My name is Slim Trady. Oh, that's pretty good. Actually, the older I get, Tom, it should be like Fat Merle. I'm getting that beer belly just will not subside. It's going to be Fat Merle. All right, let's go look at a couple different earnings announcements here. This market started off this morning with a lot of really good numbers. Look at BP, right? BP missed. It's the only one here that didn't do good this morning. But before market open, you had Pfizer crush earnings. They beat it by 46%. You had Caterpillar also beat earnings handily, and all of those struggled. Poor performance, even though the markets were doing rather well. All three, BP, Pfizer, and Caterpillar, did just not do well today. Pfizer was up 0.03%, but some other companies on here, Chesapeake Energy, right? After market close, they reported earnings. I didn't look at CHK, but natural gas. Or if you guys saw natural gas today, holy cow! Let's go CHK. Oh, it's barely even moved to that one. Look at UNG, just for those who are following natural gas today. You had a 7.91% increase today in natural gas. Pretty significant pop. And that created some pretty big waves for UNG, for Boyle, and obviously the NG futures. That was a pretty significant mover. AMD reported earnings after hours today. Let's go look at that 5-minute time frame. It's strange to see that happen. For those that follow the markets and are obsessed about it, usually ticker symbols with 3 letters or less are New York Stock Exchange, and 4 letters or more are NASDAQ. So I was kind of surprised to see, AMD have such a reaction. Oh, it actually got crushed after hours today. Oh, never mind. But it's listed on the NASDAQ. It's got 3 letters and it's on the NASDAQ. So they broke protocol by putting a 3-letter symbol on the NASDAQ. But hey, it is what it is. There's your after hours whipsaw from that one. It was getting crushed and then coming right back up, almost to break even from where it closed at. Yep, it's actually right where it closed at right now. I didn't look at those numbers. Let's see if they posted them here. They estimated they're going to make 67 cents per share. They reported 70. Looks like they beat on earnings and on revenue. So I'm not sure why it got beat down like that. But yeah, AMD looking good. GE short, NJ says. Let's check out GE. Let's go to our daily on this bad boy. GE short. I wouldn't say right now I'd want to be going short. I don't. I would not. I wouldn't look at shorting yet. It does have a slight downtrend to it. I mean, you could definitely make the argument it's making lower highs and lower lows. But I don't have a justification for shorting now. It's not at a supply zone. It's not breaking through a demand zone. So there's no real trigger point for me at this point. If you felt like this downtrend was going to continue and drift lower, then sure, you could go for it. But I don't see anything that would make me jump out and go, I got to go short this one. Just don't see it. Going to sell puts on Tesla. What would it be? Ooh. There's a lot of speculation about where Tesla's headed here. A lot of people are focusing on the $100 mark. I'm like, that might be a little bit far from current value, at least I think from current. I guess really it depends on how much risk you're willing to take on those Tesla trades, Michael. Like if you are really aggressive, you can get some fantastic premium at levels that aren't that far away, a little 20 points down. So you could sell puts that are 10% lower than current price and probably get yourself 3 to 5% for the next 30 days. Probably more than that. I don't have an option chain in front of me, but you probably could do that. I'll put some horizontal lines on here, and we'll move these ones down just to keep them on our screen. You have really, it's the 180 mark becomes appealing to me, and you also have this 166 mark. Those are the two that I would be considering selling puts at right now, but I'm just going to wait. Again, I don't want to jump in front of Apple. There could be a lot of money made on that Apple trade happening on Thursday night. I just don't need to take that chance. And I'm having a very good year again, and I don't want to put myself in a position where I get too aggressive. I think you guys would all resonate with that or feel that kind of same emotion. If you're having a great year and you know you're getting down to the last couple months, right? I got 2 months left out of 12. I'm having a great year so far. Sometimes you get cocky. Sometimes you get that like, hey, I'm on fire. I'm crushing it this year. I'll make some bigger trades. I'll be more aggressive. I don't think I want to put myself in that position, because if I'm on the wrong side of an Apple trade tomorrow or on Friday morning when it opens up, excuse me, that could wipe out a lot. And I may trade it, but I will do it so very lightly, just to have a little bit of skin in the game, just to be part of that excitement. We'll talk about that on the Thursday show, right? We'll talk about it on Thursday's show. I will probably have a position open, but I'm like, it might be like 1 or 2 contracts. It's not going to be 30 or 50 or 80 contracts. I'm not going to go big in any way going into that announcement. Typically what I'll do on a Fed day is I will put orders to buy way out of the money on both sides. So let's say the S&P is at, actually I'll just do triple Qs. All right, let's do SPY. So let's say, tomorrow we have that FOMC announcement. Well, I may be out here with just really wide orders, and I'll say, okay, if it gets up here, I'll do a limit short at 436, which it's probably not going to hit it. If it does, that's so far out of the money, I'm fine with that. And I might do something else, like probably not that far out. I'll go down about here. Let's say the 404, and say, all right, I'll be a buyer at 404. And what you usually get in the after hours on these not after hours, right as that announcement happens, the charts look like this. Bing, bing, they're up, down, they're positive for a minute, they're negative for a minute, and they just keep oscillating back and forth. To me, that's where that opportunity lies to be aggressive and go kind of outside of those, try to pick the outside of those ranges. So I'll have some orders to buy SPY and short SPY at different levels tomorrow on that FOMC announcement. But again, nothing big. I do not want to take any big chances here. Just not worth it. That's right. August, stick to my plan. And certainly don't get ahead of myself. You guys are all, if you haven't experienced it, you will experience it at some point, and that's where you get so excited and you're like, man, I'm on fire, and you want to push and push and push, and then all of a sudden one thing happens that erases it all. Yeah, I've had that happen too many times. I certainly do not want to give back the gains I have on this year. I want to end on a really nice note. So I'll be a bit more conservative going into the tail end of this year. And that may change after Apple's earnings announcement. It's just such a wild card, such a mover. I don't want to get in front of that one. But after Friday, okay, fine. I'll go back to my normal trading, which is going to be a little bit more calm, right? Markets aren't going to have any major outlier news events other than Iran and Hamas issue to create havoc on the market. Apple is one of those ones that can create havoc, and so are FOMC announcements. So this week, just being extra cautious. Let's go look at euro. Let's go look at just dollar. One of the things that we talked about the other day was going to Japan, and I'm looking at this more and more, and it's like I have to look at this. Look at this candle. So in crypto, there's a term called a God candle. And a God candle is one that's just so ridiculously big. You look at it and go, what in the hell is that? Well, we had a God candle today on the Japanese yen. From bottom of that candle to its peak, you had a 1.83% move in the US dollar against the Japanese yen. All of you are going to look at that and go, 1.83%, that's nothing. That's drop in the bucket. VIX was down 8%. Who cares? Big deal. That's the value of the dollar against an entire country's currency. That is a monumental move. And you look what happened. We ripped through levels we haven't seen in decades. You can go back to this peak here that goes back to October of this year. But I'll zoom out even further, and I got to shift this over to like a monthly, just so you guys can to see where we're at. All right, if I look at this monthly time frame, it goes all the way back here to 1998, and really we're above that. So, we're looking at levels now that we have not seen for 35 years. 35 years the dollar has not been this strong. So again, this is one of those ones where it's like, hey, let's go to Japan. Really seems like the place to, and honestly, you look at this chart, I think you'd all agree it actually looks like it's going to continue, right? You've got a double top forming right now, but it's got a higher low. This could very easily pop to the upside, and next thing you know, you've got a much bigger move up in the dollar against the yen. However, even though this looks great, it looks like the dollar is surging. I believe that you're going to hear talk by the end of this year that the Japanese need to step in and intervene. That they're going to have to step in and do something against this because the dollar has just gotten too strong against the yen. Crazy to see it at these levels. Yeah. So I may be taking off to Japan here soon. I think I got to do it. I have to. Let's see. You wanted the euro. Let's go check out that euro USD. So this one here is a little bit easier to trade, right? If you look at the definition of a trend, especially if you're looking long term, your bias should be to the short side. Now, I say this just because I'm on a monthly time frame. If we break it apart to something that's more manageable and more tradable, like swing trading, it brings up this picture here, which certainly since July has been on a really aggressive downtrend, beautiful downtrend. It feels like it's stabilized a little bit right now. Is that downtrend done? No. In my mind, it's not. And you have there's a couple pivot highs here. I think this 107, 107 is probably this most significant pivot high here. And until that's broken, meaning it rallies up from current levels and breaks 107, my bias is still going to be to short this one. Just my perspective. I know it's not. I get through customs with this outfit. Margaret, don't tempt me. You know what? I'm gonna take video of me going to Japan in this outfit. That's it. With the watch, with the gold bracelet over here with the diamonds in it. I got my bling. But just walk through the control. What's up? Here's my passport, yo. Nah, maybe not. I'll wear the tracksuit and maybe the Kangol. I don't know about all the gold chains. The tracksuit's pretty damn comfortable. Anyway, for that euro, it's tough. On the shorter term, if I look just what's happened since the month of October, it actually feels like we've stabilized, right? If I look at just this, okay, you're starting to make some higher highs, higher lows. But this downtrend that started back here is just too strong. It's just too strong for me to think that it's over for the downtrend in the euro. So I'll have to wait for it to get above 107. Oh, yeah, right on my shoulder. I wish I had that old boom box. Yeah, I'm an NFL player that weighs 160. And I'm pretty sure that's not going to fly. What were you, water boy? Hey, Johnny, good to see you, my friend. So yeah, I'm not a big fan of going long on that euro right now. Especially if you look at the size of the moves, there's just not any real huge moves going on with that euro. So I would sidestep that one. The real most compelling one here is this U.S. dollar Japanese yen, and I think we had Scott McCormick's. I think I saw it on the screen here. Scott McCormick on January 5th of 2022. I wrote that date down because hey, Scott McCormick's just one of my favorites. He had said, I think it was actually this level right here. I'm not sure why I wrote Scott M up there, but I think he said it's going to go to 145, and we eclipsed that. So I'm going to have to get him on to see where it's going to end up going next. There you go. A white Dion. There you go. A Weon. What else? I was just disassembled my old PC and was going to put it all back to where it didn't have. Okay, good. You know what? PCs are actually pretty easy to work with. What's it called when it's a big move? to the downside, a devil. Yeah, it's funny, Mike. There isn't a name for that, but yeah, I would probably call it a devil's candle. Why not? Everyone talks about the God candle, but I think it'd be pretty funny to call it the devil candle as well. One that just goes straight down. Chio, do I trade Bitcoin? I do not trade it. I'm not in there buying and selling with regularity. No, I am a hodler. So I buy Bitcoin. I have a sizable position in Bitcoin. And for those that follow this show, my plan with Bitcoin is very simple. I am holding my Bitcoin until when? November of 2025. And when that date comes, in the month of November, I will sell 100% of my cryptocurrency holdings. I will go to cash because there is a 4-year pattern that repeats itself. I have a whole video that I recorded on that one. What I will do is I will put that video down below in the description of this show today. Because this is live, I can't post it up in the video. So I will post that in the video after the program today. I'll put that the Bitcoin video where I talk about the future of Bitcoin and why 2025 is the point where it peaks out. And from that point, we'll probably fall between 70 and 85% over the next year. And then I'll buy back in. Can you look at today's NVIDIA candle? Sure. Go check out the old NVDA. And we'll go back to a daily on this bad boy. Oh, yeah. So someone asked me about this, and I apologize I don't have your name in front of me. It was very clear that they were wondering, is this a head and shoulders pattern? And I would argue yes, right? So let me draw on here the head and shoulders pattern. It's kind of tricky, but I'll do. There's your left shoulder. There's the head. There's your right shoulder, and there you go. So those are your three variables that make up the head and shoulders pattern. Now, based off that, it's not exactly a perfectly sideways line. It looks like that's the head and shoulder. Right about there. I'm slightly off on my left side calculation, but we'll get that dialed in. Oh, great. I forgot to have this thing on. Okay. All right. So this is pretty much where I would call that head and shoulders pattern. And, based off what we talked about in measuring these things, your head and shoulder pattern would look like this, which would give you a target on NVIDIA. And by the way, it would mean that you're already short because it did break down 3 days ago. It means your target for NVIDIA is 310. Actually, a little bit lower. Yeah, right, 310, which would pretty much be closing that gap. So, yeah, I like NVIDIA as a short. I think it's prime. I think that's a head and shoulders pattern. You have one big obstacle in front of you before this really starts to fall, and that is this low point right here that happened on June 7th of this year. Once we get below 374.75, then it's all gap fill, and that thing could fall pretty quickly. So, Margaret, you're correct. I do think the neckline is broken. I think the neckline broke on, what day was that? And the neck broke on my birthday, October 26th. That's when the neckline was broken on this head and shoulders pattern. We've been traversing sideways a little bit here. It's not a real perfect head and shoulders, but it is a head and shoulders. You can see you've definitely got the left side of it showing strength and all of a sudden the right side of it showing weakness. That's the whole premise of a head and shoulders pattern. I'm looking for a pop-up and buy puts a bit lower. Okay. Yeah. I think there's plenty of opportunity here. I like NVIDIA long term, but I'm one of those people that feels it got way too overvalued. I think it got wrapped up in so much hype. So the ICT thinks Bitcoin is going to zero. I don't agree with that one. Yeah, I don't either. Now, could it go to zero? Yeah. Bitcoin could absolutely go to zero. Look, if someone cracked SHA-256, the encryption algorithm for Bitcoin, that means that they could target any address and pull whatever money is out of there. Once that is found out, Bitcoin would go to zero pretty much. No one would want to hold it because no address would be safe, right? I could just go to this page right here. Then this is only if you can crack SHA-256, which is military-grade encryption that no one has even come close to hacking. At least there's nothing documented out there. But if you had SHA-256 and you knew how to crack it, you could go out here to this page right here. Oh, I don't know why I brought it over there, but you could go to this page here. You could scroll down. You could find this top address right now, which has $8.6 billion in it. You type in this public address. You extract the private key. You take all that out. Then you go to the next one. And here's another $6.1 billion. You have $14 billion just in these top two addresses here. You would just start draining these one by one by one. As soon as that happened, everyone would be dumping Bitcoin. So in theory, it could happen. I don't believe it will happen. I don't think so. I think Bitcoin's got the digital gold standard going forward. I think that once we get more adoption and more people see the safety of it, the need to actually have true, honest, real money that can't be fabricated or manipulated, or banks that manipulate you and your money, prevent you from accessing it. Bitcoin doesn't care. Bitcoin just says, you have an address with some Bitcoin at it. Prove that it's yours. And I say, okay, I've got my private key. It says, okay, it's yours. Good. Didn't the NSA create SHA-256? Correct, Shinobi, which all of a sudden makes you wonder, right? Like, wait a minute. But, there's been thousands of cryptography students that have looked at SHA-256 and have used it for years, and no one's even come close to cracking it. So, but here's my thing. Someone will come in the chat and say, well, wait a minute, hold on a second. What about if we get quantum computing? And what if quantum computers get so powerful that they could crack SHA-256? Then we'll probably go to SHA-512. They'll just double it again, or then 1028 and 2056, whatever it is, and keep doubling it, making it impossible for the quantum computers to figure that stuff out. All right, I'm looking at a watch that's broken. What time? All right, I gotta get ready, get out of here. Let me walk you through what's happening tomorrow for the earnings calendar. Again, the real monster stuff happens on Thursday, so let's not worry too much about tomorrow from an earnings perspective, but I'll start there. You've got Roku, Roku, CVS, Qualcomm, PayPal, Energy Transfer Partners. You got Kraft Heinz, and Etsy. Those are some of your big names for tomorrow. The Qualcomm is the one that will probably be, if I had to pick a popcorn trade of the day because I want to see a chart like this, it'll be Qualcomm. QCOM aftermarket hours tomorrow will probably be fairly volatile. And let's look at that Qualcomm chart here real quick just so we can see. I haven't traded Qualcomm in years. I used to trade it quite a bit. $108. Yeah, this could easily have 10% swings up and down. It's a terrible looking chart. Qualcomm is certainly not looking like it's got any health to it, right? It looks pretty weak. Big downtrend, lower lows, lower highs, kind of basing right now, but still going all the way back into 2020. Qualcomm has not been a good investment for anyone to hold on to. And then we go to the economic announcements, and there are quite a few. Let me bring up that Forex calendar. Why do I? There it is. That's Wednesday. There you go. So for Wednesday, you have ADP non-farm employment change coming out. That's well before the market open. Again, a lot of people focus on that to see not only job creation, but which sectors might be benefiting from job creation or job destruction. Moving further down that list, you do see there's some manufacturing PMI numbers. That's going to happen for the Swiss markets, for the Canadian markets, for the English markets, for the Europeans. We have a lot of manufacturing numbers coming out tomorrow. You have JOLTS job openings. You have ISM manufacturing prices, construction spending, vehicle sales. It is a big day for announcements, but all of them pale in comparison to what happens at 11 a.m. Pacific, 2 p.m. Eastern Standard Time. That is the Fed funds rate, which is expected to stay at 5.5%, as we talked about. So that's your earnings calendar and your economic. All the big stuff is going to be U.S. based. Yeah, you can see here it's got saying that the important one there might be the Swiss franc, but I don't think the Swiss National Bank chairman speaking is going to have a big impact on the markets at all. Mike, I should have had. That would be pretty funny to be Mr. T, but I just didn't want to shave my head today. No wigs. I'll be Mr. M. I pity the fool. Give him more gold to me. Anyway. That will do it for today. For tomorrow, we are going to have John O.G. O'Donnell on the program. We're going to talk about bond vigilantes, a little bit more about bond markets and things like that, which is always exciting. Of course, for anybody who has not seen John before, if you have questions about macro pictures, Austrian economics, just questions in general, John always loves questions. So go ahead and send them on in. You can send them to TraderMerlin@gmail.com. And yeah, just let me know what your questions are. Or put them down below any of the YouTube videos. We can get to those there. And we'll get that with John on tomorrow's show. Let's see. Dave says, I have one more for you. Have you looked at RSP? Do you think it's a more accurate measure of the economy than the SPY? No. RSP. Oh, okay, I see why you would say that. So RSP, what it does is it's the S&P 500, but each company has an equal weight, right? They're equally weighted. Yes, I actually, well, it's tough to say. I mean, it really is tough, Dave. I gotta say, it's very difficult because our economy is really driven by, those companies we talked about, Microsoft and Google and Amazon and Facebook and and Apple. And there's a reason that they give them that extra weighting. The reason we give them that extra strength because they are the pieces that are just driving jobs, they're driving sales, they're driving growth. It's not to discount, Sprint. Sprint's part of the S&P 500, but this says let's take all 500 and make them equal weighted. And I think I would say yes. I think it's better representation because it gives everybody equal credit. But remember, some of the companies that are in the S&P 500 are extremely small market cap and don't do much, right? Let me bring up an example here. Hold on, give me 2 seconds. And you're in my doghouse, Dave. I was free. I was off the show. I was wrapping up, and you just pull me back in. Let's go. NASDAQ 100 weightings. And I'll show you the S&P. All right, so here's the NASDAQ. Let's move away from that and go to the S&P since that was the topic. We'll go to the companies. These guys are the ones that are driving everything. Now, if we scroll down and go to the very bottom here, do you think it's safe and fair to say that a company like Mohawk Industries deserves the same sort of influence as Apple or Microsoft? I kind of disagree there. Comerica, Ralph Lauren. And Ralph Lauren is a big company, but they don't do anywhere near the business that Apple does. No, not even remotely close. Whirlpool. Okay, we all love our washing machines and our dishwashers, but I don't know. It's tough. I'm kind of torn on that one, Dave. It's hard for me to say. In theory, I like the idea of an equal weighted, right? I don't like the bias. I think what has happened is I believe that the biases have gotten too heavy, meaning that the weightings of the top components of the S&P and the NASDAQ are way out of line. I don't think that should be that far. Mohu, right, Shinobi? Like, I've never heard of some of these companies. I could run down this list, and I'm sure a lot of you go, who the hell's that? VF Corporation? Tapestry? No clue what I'm guessing they make curtains. Dentsply Sirona? These are not household names. FMC Corporation? Etsy? Okay, fine, but I don't know. It's tough for me to say that they should all have an equal weighting. I think that there's definitely some that represent our broader markets better. And, the big growth drivers have been, at least for the past 30, 40 years, technology. So, John is very interesting. Bonds not so much, and I can explain how a bond is actually like a bond is like an option thanks to Bill Gross. Yeah. All right. Well, I'm still bringing him on anyway, Tom. Would have been a better question. Yeah. That's right. I did bail yesterday. I'm sure you're trying to stretch these shows longer and longer. No, I like the S&P 500 market. It just, when I lived over in Europe, everyone talked about how the Dow Jones Industrial Average was the index. And every time I would go to the room or go to watch TV, get my updates and watch news, it was always the Dow. And I just kind of laughed at it because I think it's bad reporting in my opinion because the Dow is only 30 components and not really, I wouldn't say those companies represent all of America. They might represent snapshots and segments of it, but I just don't think the Dow is a good accurate representation. I think the NASDAQ is maybe a bit too tech focused. That's why I like the S&P. It's broader. Ideally, we'd use the Wilshire 5000 because that is supposed to have all the stocks that are traded on the exchanges. And that would be the better representation, but nobody ever looks at the Wilshire 5000. All right, that's it. That's it, Dave. I'm out. Okay. Still, Vans. You think Vans is going to be more influential on the economy than Apple? I wouldn't equal weight those. No way. All right, guys, that's going to do it for me. Tomorrow we'll have Jo on the show. You got your economic announcements. You got your earnings calendar. It's Halloween. Go do something fun. Scare some children. Give them nightmares for the remainder of the year. That's my goal. I'll see. I'll post a video tomorrow of the haunted house just so you guys can see what I've done and how I torment children in the neighborhood. Although they keep coming back year after year. And it's actually getting more and more. I'm gaining notoriety. So, I have hundreds of kids that come by my house every year. So I normally do trivia on Tuesday nights, but I can't do it tonight because I got to scare some kids. Anyway, hey guys, have a fantastic Halloween. Dress up. It's the one day a year you get to be quirky and do anything that you want to do. So have a great Halloween, and I will see you guys tomorrow with John O'Donnell. If you have questions, send them in at TraderMerlin@gmail.com. I'll see you.